All right, thank you for joining us, everyone. We're gonna try and keep this kind of light and less regulatory, less bleak.
Thank God.
Yeah. All right, before we start, really briefly, if you could present yourselves and how did you get into this wacky space of talking about crypto in London today?
Yeah, so my name is Delgado. I'm the CEO of Goliath Ventures. We're a private equity fund. We operate out of the US and Dubai. And our firm started about 6 years ago. We look for projects in the Web3 space that utilize technology that we want to invest in and then further expand. And two of the companies that we've invested in are up here on stage with me as their founders. So we're, explain to you guys why we chose their companies to invest in. And if you like money, we're looking for other companies to invest into as well.
Love that. All right, perfect. We're gonna get into all that. I love him. He's already taken out the panel. He's already, I love it, love it. Please.
So my name is Junaid Dar. I'm in the software industry from the last 20 years. 4 years ago, I sold the software houses and went full-time into crypto, started building my own projects. And today I'm founder and CEO of Bitwat, which is also a VC, and also the CEO and co-founder of Seed Hunter, which is an early stage launch pad. So this is where we came actually together here.
We'll get into all of that as we go along.
Yeah, hi, I'm Assad. I worked almost 15 years in the pharmaceutical industry, but more in the IT sector, in digital marketing and then IT consultancy and digital transformation. And digital transformation is actually the point where I changed to the blockchain industry, because I truly believe that blockchain technology will change a lot of industries, from healthcare to gaming to financial industries, because everything based on ownership, blockchain is the best technology in the world to utilize that. And then after 15 years in the pharmaceutical industry, being a manager in a multi-billion-dollar pharmaceutical company, I built my own startup called Medieval Empires. It's a mid-core strategy game using a very big actor, actually the second biggest actor in the Muslim world, who was in a TV series which had 3 billion views. He's the face of the game, and we have a great gaming team from big gaming studios, and working on that since 2.5 years now, and doing good progress.
Perfect. All right, so the title of the session talks about private capital and investing in the Web3. So Chris, what is the difference between private capital and, I would say, what we know as other or traditional capital? And how does that let you operate a bit differently?
Yeah, so the biggest difference is private capital means that it's either all of my money or it's close friends and family. And that's the best thing about how we built Goliath. Was I had 2 large companies a couple years ago. One we went public and one was private, and we ended up selling both of those. And I started the fund with my own money. And the reason for that was I wanted to be in control of where I put my money, the companies I invested in, and also have control into the companies that I was investing in. With that and the success we had with my own money is when we opened it up with friends and family. So everyone invested into our fund we personally know. They trust us, and we've had a proven strategy over the last 6 years of winning. And so we're allowed to allocate funds based on the in-depth audit that we do for other companies, and to bring them in without a board, without approval of our investors, and just solely reliant on that. We've had a very successful track record.
And specifically in Web3, does that give you the ability to maybe cancel a lot of the short-term noise? Because I know that when you, traditional Web3 VC, which is a funny word to say traditional and Web3, but or you took non-crypto people's money, and then every time that Bitcoin goes down by 5 or 6%, you're getting all these frantic phones or whatever. So day to day, why do you think that the way of operating with private capital, specifically in Web3, gives you more agility?
Well, it just allows us to make decisions on the move, like you said. If Bitcoin goes up or down, or the market goes up or down, we can make a call in that split second, rather than calling a board meeting, rather than giving all our investors a chance for a call or something. They allow us to move where the market moves. And like I said, we've had such a successful track record, and we have the trust of our investors that we don't need to get their intake on where the market moves. Because everyone wants an insight, or everyone wants a say when the market drops 10% or 20%. But if you look at where the market has gone, I mean, Bitcoin's up like 600,000% from inception. So,
still doing pretty good.
Yeah.
Doing better than those dollars in your bank account.
All right. Yeah, exactly.
So I want to move down a bit. So move to kind of the founder side, and again, you guys are also launch pads and VCs or whatever. So how do you see the space changed a bit in the past few years when it comes to fundraising and also allocating funds? So I can tell that like a few years ago, literally founders would send 3-4 words, 2 slides, and their tokenomics. And that was like, all right, then you look at that. Now, then it was like an equity move with maybe a SAFT in the background. So is it like, are you looking for like huge rounds, small rounds? How is it changing? Is it more public? Is it more private? How do you see crypto fundraising changing in the past few years?
Yeah, I mean, like especially in the last bull run, we saw everything.
There was a bull run? I didn't see it.
So, yeah, I mean, like in the last few years, like back then, right? So everything was built on hype, right? So you didn't even really need to have like proper tokenomics, right? Nobody really checked it. Or those super sophisticated white papers, right? So nobody read it back then, right? So, and I mean, this is maybe still true nowadays, but what you see in the market, especially when we talk about private equity or the VCs, they're, I think, taking this like way more serious right now, right? So they're really checking the fundamentals. Is a project market fit, right? So is there a really like real life utility? Back then, there was just like, okay, it's hype. Many people will jump on it. Okay, let me invest early, right? So, but nobody really checked like if this is really a sustainable project or not, right? So, and I think there is a slightly shift, and we can just call it the normal maturity of the market, right? So, which always happens, right? So you can compare it with the IT bubble in the early 2000s, right? So you just put on the IT bakery, and you got just money, right? For it. Nobody checked, right? Yeah. So, and then of course the more sophisticated investors took over, made smart decisions, and like were successful with those investments, right? And we see that this shift is like very naturally happen here as well, because Web3 is still Wild West, right? So, and this is also like why we have built Seed Hunter, right? So Seed Hunter is really like looking into the projects, doing a proper due diligence. So we have different partners as well. We have our own team, right? Bringing projects on, really checking them, and then providing them like a stage for the crowd to invest, right? So we are trying to bring like more maturity to the market or grow the market, yeah.
Okay, so I just want to riff on that, and then I'll move forward. No disrespect to anyone's business models or whatever, but don't you think in general that we've been building enough in crypto in general? Like, so a lot of things have funded, a lot of projects, and again, the fact that as a marketer in the space as well, we built the industry to launch shit. Sorry, but there's launch pads, KOLs, allocations, whatever. But how about the process of like scaling shit?
Yeah, I mean that's actually the perfect segment as far as the last bull cycle. We gave the influencers and the KOLs the keys to the castle, and they, excuse my French, but fucked it all up. And
so apparently, when you pay someone to say you should buy something, then maybe the quality of what they tell you to buy isn't going to be the best in the world. But
where we came in and why we've had success is my background's in corporate America. And I've had executive positions in corporate America for the last 10 years. And you have people that have 1 million followers on Twitter shilling a company or shilling a coin, but they have no idea on actually how to run a company, on how to produce profit.
They also just post ChatGPT created prompts or whatever.
These KOLs don't even know what a balance sheet is. Yeah. Every morning I get a balance sheet from my accountant that shows how much capital I have in my personal account, in my business account, and how we can allocate funds. These guys have no idea what their token holdings are. And they're like, oh, we found, I mean, look at FTX. They're like, oh, we found $500 million. Just don't find $500 million. Like, where is that allocated at and where's that capital is? So, I mean, yes.
Funny story out of that. So I run a marketing agency. We were FTX's PR back in the day. We worked with them for about 1.5 years, and they paid us. I'll get to it in a second.
So it's your fault.
No, they paid us, but no, this is a lot before things exploded. They paid us, but actually today, if you go to the courts, we're considered a company that they're owed money to. They don't owe us money. They just didn't have a balance sheet. So literally, all you see is that they had debt, but no one on the balance sheet even locked it that they had been paid. But never mind. So talking about KOLs. you specifically said that you embedded a very influential person into your core business. You go and say, all right, I need reach, I need someone who's gonna be a figurehead. You said yourself that you guys have like one of the business models, one of the key things that you have, one of the most influential actors in the space, but he's not a KOL, he's a core part of your team. Can you explain why you went on that route and not just try to give tokens to a bunch of famous people with clout to promote you?
Yeah, I mean, maybe also to answer first on the question you had before, like, don't we have enough projects and stuff like that?
Yeah.
I just read an article that we have like 200 layer one chains.
Yeah, so I'm gonna get that. We're gonna get that in a second. There is, so Parify, I think, just did a report. By the end of this year, there's supposed to be between 200 to 300 VC-funded L2s.
Yeah.
200 to 300 VC-funded Ethereum L2s. Yeah.
Exactly. So, I mean, and this shows that VCs, they invest in infrastructure a lot because for the risk sharing, right? Like more apps on that. But the actual dApps on these chains, like there we have lack of quality, I would say.
There were more side events in ETHCC about infrastructure than people using a blockchain to do something other than buy and sell a meme coin that day, most likely.
Exactly. But this is the reason why, like, everyone focused on infrastructure, and because of that, it's a lot of infrastructure, but not enough dApps, because the risk sharing on a single dApp is obviously, or the risk is higher, obviously, because it's just one project, right? And you have nothing else running on it. But how we solve it, like, as medieval empires, first of all...
Trying to solve it.
Yeah.
We haven't solved it just yet.
I mean, we have a world-class gaming team. If you compare our team to a lot of Web3 games, you will see that we have, like, our CTO is from King.com. They made like the most successful games in the world. And our art director is from Disney, 20 years at Disney, worked on the big Disney movies. Cool. So we have a world-class team. I think this is one thing which is important. And then for the go-to-market, I think this is also something, I mean, I worked in a multi-dollar billion company in marketing. And I understand how people perceive products. And this is the reason why I went to this big actor, who is like the second biggest actor in the Muslim world, and brought him in as the face of the game, because a go-to-market strategy for games is obviously hard, because you pay for everyone who needs to come to your game, obviously, and they need to make money in the game, so it's very expensive. But if you have this big guy on board, who's not just a simple influencer, but he's like a big actor, he brings his own community into this game from the beginning. So you have a
look at celebrity-run liquor, or not run, promoted liquor companies that they've been taking over the world. Whatever, it's a generic liquor company, but the face of that person is.
But it's even more. Like in a game, it's more, because he has so many fans, and they can play with him, basically, right? So they're playing with him in the game. Like, he is in the game, they can experience this guy directly in the game. This is the whole difference you have.
So Chris, as you said, it's your stage, you've been invited here, and you actually decided to share it with two of your portfolio companies. Not something that most VCs I know would do. Both companies here are not deep infrastructure. You're not doing ZK, intent-based, monolithic, is that part of your investment thesis? Are you, what are your thoughts on that?
No, what we tell people is everything that we're doing, we're not changing the face of crypto. We're not investing to re-landscape because no one knows what this space is. No one quite honestly can say, like, we're gonna change the way this happens or the way that happens. What we look at is the leadership team. Both these people both my friends come from very diverse backgrounds and have a lot of experience. They know how to run companies. And so when we entrust them with our own capital, what are they going to do with it? We've invested in companies in the past, or I personally invested in companies in the past, and a week later, the founder's driving a new Ferrari. Yeah. And so it's like, where is that money actually going to? So yeah, you're right. Like, what we're talking about here is, as far as infrastructure or anything in crypto, they're not changing the face of crypto in a sense, but they are building a profitable company.
Well, if they bring users, they're going to change Web3 because we don't have a lot of those. So I think that's a very kind of big center. So when you guys build your businesses today, the dream is that people will be using blockchain or crypto, but they won't know that they're using it. So again, today when I go into Facebook or whatever, I'm not told that I'm in an AWS server or whatever. And of course, if I need to change websites, no one tells me move from Azure to AWS or whatever. How do you guys build products or companies or projects today with that in mind? So it's like, or I go full crypto degen because that's the user base, or I try to make it seem like there's not a lot of crypto in that, but then I actually have to try and attract people that are not in crypto. So how do you kind of do that balance?
Yeah, I think by doing both at the same time, right? So providing the infrastructure, or providing, in our case, for our platform, the login for the crypto natives, right? So login with your wallet and so on and so forth. But then now talking about the non-crypto people, so they still maybe want to invest in profitable projects. So you bridge that, right? So then you have a fiat system, you send your fiat, in the background we convert it to crypto, send the crypto to the projects, right? And then have a custodial wallet, right? So holding it. Yes, I know it's somehow against like maybe also our belief of a decentralized, and you own your own tokens and so on. Yes, so you can say so. But I think teaching people that they can invest their money into like good crypto projects, maybe it's a first step, and later on they will just learn how to operate in their own wallet and so on and so forth. You don't have to teach them straight away how to do everything, right? Just
I really agree with what you're saying. I actually think that the way for, I don't know if everyone's like, oh, we need 1 billion users. Let's try to get to 10 million first. Right? Yeah. And I think the way to do that, so everyone try to do everything super decentralized from day one. And I think that not every business needs to be fully decentralized. I always say this, would you drive a decentralized car? I wouldn't. Like, would you fly a decentralized airline? I'm not sure. That doesn't mean that they can't use blockchain or crypto. Doesn't mean that they can't have different reward systems or whatever.
Look at NFTs.
Yeah.
What a dying market that was.
Yeah.
Yeah, you know, to your point, decentralized car, decentralized picture died real quick.
Yeah. There's a problem with scarcity when anyone can go to any AI company and just like do that and then create new monkeys or apes or whatever.
A screenshot fixed that real quick.
Yeah. So we're getting onto the kind of, I would say, later part of the panel, and I would love your opinion. So we have to touch on, I think, one dot. So there's 2 things I'd love to touch about. Guys, come on, 5 minutes, give me. So meme coins are one of the biggest narratives of this cycle. A lot of people complain. They say, oh, it's bad, it's ruining the industry, it's we have to clean it out or whatever. I, as maybe someone who's been in crypto for a long and came through like cypherpunk issues, so I don't like meme coins, but it's also market, and the market can decide what it wants. So why do you think that this is what's the most prevalent part of this cycle? And I can give you my 2 cents, and if you ask me, it's retail telling us founders that they don't even care about our white papers anymore and our ideas for AAA games we're gonna build with $800,000 funding, not that you can. So they're like, let's just do a picture of a dog and start rugging ourselves. Like we don't care about the founders that are gonna get a Lamborghini tomorrow. Why are meme coins so big? What do you think that they kind of capitalize? And is there anything good about it? Is it 100% bad? What do you think about it?
I find it like truly fascinating how memes works, right? So because you see it's somehow a bridging between like culture, community, finance, right? And this brings it all together. So which is really stunning. And then exactly what you're saying, it somehow looks like, if you look into meme, that somehow they just don't like white papers, as we mentioned, right? And all the complexity around the project. But maybe it has also to do with the new inflow of users into Web3 and this narrative, you can get rich fast, right? Which is, I mean, in this case, not really true. You always have those 1%, 2% with a success story with, oh, I make like this and that much money, right, in a day or two. But it's not true for everyone. Like, if those guys win, usually in a Ponzi scheme, and I don't want to compare, right? So, but there's a small amount of people who win, who shout out the success story, and most of like everyone else is losing, right? But
there's been a lot of on-chain analytics, and I think actually Blockworks did a cool report about that. So with NFTs, there was actually, first of all, NFTs brought new users to crypto. Actually, MetaMask said that NFTs was the biggest cause of opening of new MetaMasks, I think, in recent years. But also a decent amount of people did make money off of it. Meme coins, did not bring a lot of new users. We're talking about maybe 5 to 10% of people trading meme coins are new to the industry. And we're talking about less than 2% end up with more money than they started their excursion into meme coins. So
but this again, I think again like an immature.
Again, on a wallet basis, I don't know how to say if that wallet and that wallet are not the same people, whatever. But if you look at single wallets, their first meme coin, and when they stop trading meme coins, about 1 or 2% will have more capital in their wallet than when they started.
Yeah, but this is again like immaturity of the market. It's again the Wild West thing, right? So people are trying out like whatever you can do, it will be done, like 100%. But I think at the later stage, look, if we talk finance in general, there is only this one way in finance. And crypto is somewhere a little bit off. But like throughout the time, it will align, right? So with the maturity, with the regulations and everything, so it will come all to one way. I don't say
I sometimes say that
into finance, but like,
crypto is tokenized narratives.
yeah.
what do you, as a VC, you look at that space, did you ever think about, oh, maybe we should invest in a meme? Like, I'm just, like, something with no fundamentals. How do you look at it?
No, we actually tell our partners that are invested with us that the day we launch a token is the day you should pull all your money out of our company. Yeah, we look.
I said the same thing to my clients. If I ever do a token, you can call me and be like, dude, are you okay? Do you need some money? Like, what's up? You know.
I mean, I like the meme coin world in the crypto because it is the Wild West. It's like the rebel cause, going against traditional finance. But at the end of the day, traditional finance built the biggest cities that we live in. And there's a structure and a plan to that, and we follow that structure and plan. And just like everyone goes off the stock market, Bitcoin trades just like the stock market. So as much as they want to be the rebel cause, they're following the same pathways to that. So we follow the same pathways in our investing strategy as well. We love the industry. It is a bit of the Wild West, but there is a game plan that needs to be set to make money. And like you said, most people that invested in meme coins are now broke or didn't make as much money as they thought they would.
Because it's a zero-sum game. It's like playing all in poker. Even if I win 10 rounds, if I'll go all in on the 11th round and I lose, then I'm out. Assad, so I just want to touch with you before we kind of go out there. So you're going into gaming, and actually you said something I want to kind of react to. So you said that in a Web3 game, it needs to be a situation where people earn money. Why? I play Assassin's Creed all day long. I barely had a girlfriend in high school because I was playing so much games. No one gave me money. They didn't give me anything. So why is this? Yeah. I think that crypto products are like first based on how to incentivize people and not how to make them want to play.
No, I don't think you need to earn money in crypto games or whatsoever.
Okay.
We believe in the ownership part of everything, right? This is why I changed the industry, like bringing ownership to the gaming industry. And then what happens naturally is if you have property in a game or items in a game and you can sell them on any open marketplace, you can make money with it. That's not the first incentive for people playing that. The first incentive is, do I have fun playing this game? If this is the first incentive and there's a community and a culture building in this game, then the items get value, then the property gets value in the game. And then you can sell it and you can make money with it. But at least there is a chance to make money. And if we talk about ownership, it's very interesting because in the West, the ownership was not very good perceived, but in the East or in countries where they had communism, where there was no ownership, from a culture point of view, they adapted ownership in Web3 much faster. So it was also a cultural thing more in the East to work with ownership. In the West, it's coming now more and more. They understand it.
Also has to do with a lot of people in the West are like, oh, I don't know what's so cool about Bitcoin, Ethereum, it's funny money. And then you meet people who are from Argentina, or people who are from Turkey, or people who are from countries where their prime ministers or regimes or whatever have told them they can't take money outside the country, or those type of things. And then you understand that it's very easy for us to sit in a world where 11% inflation is the end of the world for us. There's countries who have 500% inflation. So,
and that's why I don't think the incentive again is to earn money, but there is a potential to earn money. But the ownership part is what we really believe in.
All right, perfect. So we're kind of out of time. I just want to do a flash kind of last round. I believe if you can give people something like news you can use, a term they should read about, a company not yourselves, please, that they should check about, something you guys really believe in, and then I'd kind of really want to throw that out there. For me, personally, it has to do with just learning about self-custodianship. So I'm just shocked. I'm here talking to a lot of people in crypto and a lot of people who are more newer, and just people who told me that they still keep 100% of all their crypto assets in exchanges. So for me, I just really want to urge people, if you're in crypto, I'm not saying put all your money, but one of the coolest things in crypto is you actually hold and own your funds. So I really, really urge people to learn a bit more about self-custodianship, download some wallets, play with that. But for me, if there's one thing I can really, really urge you is that it's illegal for us to hold our money in our actual world. Your boss can't pay you in cash. You have to go through this thing called a bank. A bank sometimes can tell you, I'm giving you or not giving you your money. So I really, really urge people to learn more about self-custodianship of crypto. But that's a very larger narrative. What about you guys? Anything that people can take out of this that they should read about or check out?
I mean, I think for us, the biggest thing is if you have a project or a token, to really go back to see the viability in the marketplace. We heard a lot of pitches yesterday, and not to hurt anyone's feelings, but like you said, not everything needs to be tokenized. Not everything needs to be on the blockchain. And you could have a really great idea, but doesn't mean that there needs to be a token that follows behind it, or it doesn't need to be on the blockchain. It is an investable asset at that point.
Or how about a business that makes fees in Ethereum or Bitcoin? That's pretty cool, right?
I mean, transaction volumes is where we make our most money. So, so it's really going back to what is the emphasis on your business? Can you utilize capital? And it does the market. Gaming is huge. Gaming is a multi-billion-dollar industry, which is why we invested in them. Not to give them a spotlight, but Bitward and Seed Hunter are also a massive space in the crypto world, which is why we invested in them. So there is viability in the marketplace, and they had a company before we they had a company
fundamentals,
business fundamentals that we could invest in, and then came a token.
Perfect. Guys, anything people should look out for?
I mean, this is a very classic advice, but like also from our VC part.
I told people to open up a wallet.
Yeah.
I know.
So it's like we have different products, right? We have mining, we have the trading part, liquidity providing, and then people that check the different products, and maybe this product does maybe more gains than the other one, right? Yeah. And everyone is urging us like, put all my money in your VC into this particular product, right? Yeah. So, but just diverse your portfolio, right? So, I mean, maybe you get more here, but maybe less here, but at the end, you're way more stable, right? So, and this is like something classical advice, just diversify your portfolio, super important, even also in crypto. Don't just jump on the highest gains, doesn't make sense.
Perfect. Any thoughts?
Yeah, for me, it's a little bit biased, but I would have a look on crypto.
Play my game.
Yeah, also, but have a look on gaming and crypto. Why? Because first of all, gaming is a $200 billion industry, getting to 400 billion in the next 10 years. And also you have 3.5 billion players at the moment playing games. And this in countries where they don't have internet yet or mobile phones or anything, so this will also grow in the next years. It's such a huge industry. It's bigger than the movie and music industry combined together. So huge industry, huge disruption potential because of the ownership, because people spend time and money in a game, play it 1 year.
People do this all day long without being incentivized or getting the tank or the sword. So we think that if we incentivize them or give them the sword, maybe they'll spend more time.
Exactly. So I would really have a look, and then if you ask me, like Immutable X as a chain, I think they will make it, because if you look at events, they're not going to Web3 events, they're going to Web2 events, gaming events, because they understand we need the Web2 users to be successful in Web3. And this is also our approach. All
right, perfect. Thank you so much for our panel. It's been great. They're going to spend a few minutes here on the side if anyone wants to come talk to them, most likely Mr. Capital here. Thank you very much, and see you around.